Your money at skynews.com.au. Let's get straight into it. Julia, our markets today, in particular, the impact China had.
We saw a big impact from China, especially on the iron ore miners. In fact, if we have a look at Fortescue, BHP and Rio Tinto, all three of these stocks started off the session pretty well and was supported because they're all paying dividends in the next week or so. Fortescue goes ex-dividend on Thursday. We see BHP going ex-dividend next Monday, and Rio Tinto goes ex-dividend on Wednesday. So the fact that these dividend payments have been coming up, have been supporting the stocks. If we have a look at the turnaround, though, Fortescue went from being up 3.3% to being down 0.5% by the end of the session. BHP, which is less exposed to iron ore, went from being up 1.6% to being up 0.5%. And Rio Tinto, which of course has a large exposure to iron ore, it went from being up 1% to down 1%. Now, I guess the thing with the China story today is that real estate investment makes up around about 15% of Chinese GDP. And there were a couple of things that we were focusing in on. First of all, in terms of economic numbers, we did see property prices for the month of January being released, and we did see growth of 9.6%. Now, that's not a bad figure, but it is a little bit of an easing back from December, where we saw growth of 9.9%. But I guess the bigger story that the market was focused in on was concern that banks are cutting their lending to the real estate space. In fact, we're seeing the Shanghai Composite down by 2%, and property stocks in particular coming under pressure, with the property sector down by 4.3%. Not only that, we've seen rebar prices under pressure, and rebar is an index of steel prices, and that's been down 2%. So a little bit of a disconnect with what we've seen in terms of iron ore prices. And I guess in terms of the steel industry, it is very much driven by infrastructure demand as well as those apartment buildings going up. So concern over China, over the real estate sector, really impacting not only on the Australian market, as you can see from the intraday graph, the impact that we saw during the session for the Aussie share market, but especially on that material space. This is the material sector intraday, and you can see that while we saw a tick up at the end, for most of the session we did see the trend being down.
Should we be worried the iron ore plays?
I guess it depends on which iron ore stocks you're talking about, and really with the iron ore stocks, you want to be holding those iron ore stocks which are producing at the moment, because this is when prices are the highest. If you have a look at those iron ore miners which are coming up to production, well, they've probably missed out, and what we are seeing is a bit of a disconnect between what's happening in terms of steel demand and in terms of the relative strength in iron ore prices, and at some point in time we're probably going to see that gap closing. So if we have a look at rebar and the steel industry, what we are seeing is oversupply, weak demand, and really struggling profitability there. But if we have a look in terms of iron ore, price is still holding up relatively well at a time when volumes are increasing. And the fact that volumes are increasing for the likes of Fortescue, Rio Tinto, as well as BHP bodes well for the top three. But of course, if you have a look at a stock like Atlas Iron, it's probably a little bit behind the curve in terms of production and missing out on those very strong profits that we've seen in those last 5 to 7 years.
Interesting day for a few of them, some good, some bad. Monadelphous, Transfield, the good, the bad, more along lines of Boart Longyear. What do we take out of such contrasting fortunes, and what does it say about the mining services sector?
Well, it's really all about these big contracts that are being won, and we saw that being demonstrated today. Transfield, you have to remember the share price is still down over 40% in the past year, so it is coming off a very low base, but the stock up a massive 25% in just one session, and that's because it was awarded a $1.2 billion contract from the Immigration Department to do with Manus Island as well as Nauru. So Transfield having a fantastic day. We saw the same type of thing with Monadelphous, where it was awarded a $680 million contract to do with an LNG project, so that stock up by 6.5%. But on the flip side, you look at a stock like Boart Longyear, and that stock was down by 15.3%. We saw a net loss there of $620 million. We saw $461 million worth of charges due to restructuring as well as asset impairments. And just looking at the rig utilisation rates, in the fourth quarter we saw it at 40%, and that's a huge drop-off from where we saw it in the first quarter at 60%. So business conditions have gotten worse for Boart Longyear, so it does look like the focus really with Boart is still going to be some of those asset sales and trying to get that debt down at a time when its business is really struggling. And what it needs to see is an increase in terms of mineral exploration, and there's no signs of it as yet.
Finally, the rest of the week, what are you watching?
Well, tomorrow QBE is going to be a big one given the number of disappointing updates that we've been seeing. It is due out with its full year numbers. We'll be hoping that there's no new bad news coming through for QBE Insurance. They've already guided that they do expect a loss of $250 million US, so not expecting to see a huge deviance from that. And we are expecting to see that the next year is very much going to be focused on those legacy issues in North America. We'll also hear from Oil Search tomorrow as well as Atlas Iron. And then on Wednesday, it will be Westfield Day. We'll be focusing on the two Westfields, Westfield as well as Westfield Retail Trust, and of course Centre, which will be the new Australian-New Zealand vehicle for the Australian-New Zealand assets. And then on Thursday, Qantas. We know the problems that Qantas has been having, so its half-year numbers and the commentary is going to be closely watched. We'll hear from its competitor Virgin on Friday, as well as Woolworths coming out on Friday as well. So a very big week, the last official week for earnings season before it quietens down in March.